Welcome to Hong Kong Brief. The content of the briefing includes Cathie would nibbling back into Tesla as Wall Street's view dims. China premier visits US-blacklisted chipmaker in show of support. How Hong Kong hopes to avoid repeat of New Year's Eve's border chaos. Tencent buybacks hit record as China watchdog roiled markets. Short sellers target world's top EV maker as rivalry intensifies. Cathie would nibbling back into Tesla as Wall Street's view dims. Bloomberg. Cathie Wood's firm, ARK Investment Management, has started buying Tesla shares again after selling them for most of last year. This comes at a time when Wall Street's outlook on the electric vehicle maker is deteriorating due to an EV slowdown, drying government incentives, and competition from Chinese rival BYD. However, Wood believes that Tesla is well positioned to grab more market share as other automakers step back from their EV plans. ARK's analysis of Tesla yields a price estimate of $2,000 per share in 2027. China premier visits US-blacklisted chipmaker in show of support. Bloomberg. Chinese premier Li Chang visited Yangtze Memory Technologies Company, YMTC, China's leading developer of memory chips, in a show of government support for the company amid U.S. sanctions. Li called for further efforts on technology innovations and more targeted policy support during his visit. The visit comes as China grapples with a struggling economy and rising tensions with the U.S. over technology. YMTC, which competes with companies like Micron Technology and Samsung Electronics, was included in a U.S. trade blacklist in late 2022, restricting its access to the latest manufacturing hardware. How Hong Kong hopes to avoid repeat of New Year's Eve's border chaos. South China Morning Post. The Hong Kong government hopes to negotiate with mainland China to extend the operating hours of checkpoints connected to rail services and add more that offer round-the-clock services, after thousands of Chinese tourists were delayed or stranded at the border on New Year's Eve. Authorities also promised to better coordinate transport arrangements ahead of future large events to allow visitors to go home more easily. However, introducing more 24-hour checkpoints may cause a net loss of consumption in Hong Kong in the short term, as it would encourage Hong Kongers to cross the border to spend, according to Natixis Gary Chuk-yin. Tencent buybacks hit record as China watchdog roiled markets. Bloomberg. Tencent Holdings bought a record 10 billion Hong Kong dollars, $1.3 billion, worth of shares in December, when a raft of new regulations triggered a sell-off in Chinese tech stocks. The company has ramped up its pace of daily purchases to around 1 billion Hong Kong dollars, compared with an average of 375 million Hong Kong dollars a day last year. The controversial regulations, which included caps on in-game spending and a ban on rewards for frequent logins, revived fears that China was reverting to a 2021-style crackdown on the internet arena. Tencent remains around 4% below its pre-regulation price. Short sellers target world's top EV maker as rivalry intensifies. Bloomberg. Short interest in Chinese electric vehicle maker BYD has surged to its highest level since September, as concerns grow that sales growth may slow due to increasing competition. Short interest on the shares accounted for about 5.5% of the stock's free float in Hong Kong as of January 1. The put-to-call ratio based on total open interest has also climbed in the past month, suggesting growing pessimism among options traders. BYD, which delivered more electric vehicles than Tesla last quarter, is regarded as a bellwether of the Chinese EV market. Hong Kong's MPF reports first gain since 2020, adding $4.8 billion in value. South China Morning Post. Hong Kong's compulsory retirement scheme, the Mandatory Provident Fund, MPF, reported investment gains of 3.5% in 2023, the first increase since 2020. This came thanks to strong market rallies in the US, Japan, and other non-Chinese markets. However, poor performance by China and Hong Kong stocks took a bite out of many members' nest eggs. Funds based on those stocks lost 13.4%, the worst performance of all the MPF fund options. Funds based on U.S. equities performed best, with a 2023 return of 24.2%. Hong Kong stocks hover at two-week low as Fed seen keeping rates elevated. South China Morning Post. Hong Kong stocks fell to a two-week low as the latest minutes from the Federal Reserve indicated that interest rates would remain higher for longer. The Hang Seng Index fell 0.5% to 16,563.38, while the Hang Seng Tech Index slipped 0.1%. This comes despite a report showing an improvement in China's services industry. The Caixin Purchasing Managers Index, PMI, of the services industry rose to 52.9 in December from 51.5 in the previous month, remaining in the expansionary zone for 12 months in a row. Hedge funds push back on HK draft rules for market soundings. Bloomberg. Hong Kong's proposed rules for market soundings risk placing an undue burden on companies and people licensed in the city, according to the Alternative Investment Management Association. In an October consultation paper, the Securities and Futures Commission proposed that during market soundings, both brokers and potential investors licensed in Hong Kong need to safeguard the confidentiality of non-public information, a broader category than is currently adopted by markets including the European Union and the UK. The proposed rules would put Hong Kong at odds with other major jurisdictions and place its licensees at a significant disadvantage, said the AIMA. Asia's data center landscape is red hot and increasingly complex. Nikkei Asia. The rise of artificial intelligence, AI, is driving the demand for data centers in Asia. However, governments in the region are increasingly restricting cross-border data flows. China and Vietnam have tightened their data regulations, raising concerns among global businesses about what might happen if they try to transfer data out of the country. Despite this, most of the firm's Asia-Pacific clients are seeking to consolidate data, making Singapore, Hong Kong, and Australia the top choices for regional consolidation. The Asia-Pacific market for data centers is expected to reach $48 billion by 2027. China's 10-year yield hits lowest since 2020 on easing hopes. Bloomberg. Chinese government bond yields have fallen to their lowest level in over 3 years as expectations for further monetary easing by the central bank increase. The yield on the 10-year sovereign note dropped to 2.54%, the lowest since April 2020. This follows a rally that began last year as the central bank provided liquidity support and major lenders cut deposit rates. The expectation is that Beijing will continue with loose monetary policy to support economic growth. Economists expect moderate interest rate cuts and a reduction in the reserve requirement ratio this year. The outlook for bonds will depend on the extent of the central bank's policy loosening. Asian stocks waver as traders ponder rate cut bets. Yahoo! Asian shares have tumbled after the U.S. Federal Reserve's minutes from its last meeting failed to provide any clarity on the timing of rate cuts. The MSCI Asia Pacific Index dropped 0.26% on Thursday, with the Nikkei dropping 1% on its first trading day of the year. Wall Street's ambitions in China run into a rising firewall. Bloomberg. Global financial firms with operations in China are reportedly ring-fencing their Chinese businesses amid concerns about data security and the potential for U.S.-China tensions to escalate. J.P. Morgan, Morgan Stanley, and HSBC are among the banks that are taking measures to protect their interests in China, including separating their Chinese operations from their global businesses. Executives are reportedly particularly concerned about new Chinese rules limiting the transfer of data across borders, which are forcing banks to set up onshore data centers. They are also concerned that further tensions between the U.S. and China could prevent them from operating in the country. Hong Kong played its joker in historic football win over China, coach says. South China Morning Post. Hong Kong footballer Max Poon Pui Hin has become a key player for the national team ahead of the AFC Asian Cup after scoring twice against China. The 23-year-old forward has now scored 4 goals in just 7 appearances for the senior national team and has been praised for his speed and goal-scoring ability. Poon's goals helped Hong Kong secure their first victory over China in 29 years. However, injuries to other players in the match have raised concerns about the team's readiness for the Asian Cup, which begins on January 14. TikTok eyes $17.5 billion shopping business on Amazon's turf. Bloomberg. TikTok is aiming to grow its U.S. e-commerce business to $17.5 billion, as the company seeks to expand sales in the U.S. and Latin America. The goal was discussed in internal meetings and may change depending on the business performance. The target sets up a clash with Chinese-owned rivals Temu and Shein, who have gained popularity among younger American shoppers. ByteDance, TikTok's parent company, aims to export its e-commerce model globally, and TikTok is offering free shipping and subsidies to influencers who sell products in videos and live streams. China, Fed and elections. What will move Asian stocks in 2024? Bloomberg. Asian equities in 2024 will likely be boosted by interest rate cuts and a weaker dollar, but the performance of the region will depend on China. Investors will be watching China's recovery and its property sector, which ended 2023 with a record third year of losses. Other key areas of focus for Asia equity investors in 2024 include the Federal Reserve's narrative and the health of the U.S. economy, political risk in key markets such as India, Indonesia, South Korea, and Taiwan, and the performance of the semiconductor industry. And that's a wrap for today's news. As your friendly neighborhood Dr. Six, I brought you a mix of stories from the worlds of finance, technology, and sports. Let's dive into some analysis, shall we? First up, we have Cathie Wood making her way back into Tesla. Despite Wall Street's dimming view of the electric vehicle maker, Wood's firm believes that Tesla is still well-positioned to dominate the market. Time will tell if their price estimate of $2,000 per share in 2027 holds true. Next, we have Chinese Premier Li Chang showing support for Yangtze Memory Technologies, a chipmaker that was blacklisted by the U.S. This visit comes amidst China's rising tensions with the U.S. over technology and serves as a display of government support for the company. Moving on to Hong Kong, the government is hoping to avoid a repeat of the New Year's Eve border chaos by negotiating with mainland China to extend operating hours and add more checkpoints. However, there are concerns that this may result in a net loss of consumption in Hong Kong as locals may be tempted to cross the border for shopping. Tencent Holdings, one of China's tech giants, has been buying back shares amidst a sell-off triggered by new regulations. These regulations have raised fears of a crackdown on the internet sector, similar to what happened in 2021. Despite the buybacks, Tencent's share price remains below its pre-regulation level. Short interest in Chinese EV maker BYD has surged as competition in the EV market intensifies. BYD, which delivered more electric vehicles than Tesla last quarter, is seen as a bellwether for the Chinese EV market. Hong Kong's Mandatory Provident Fund, MPF, has reported its first gain since 2020, thanks to strong market rallies in non-Chinese markets. However, poor performance by China and Hong Kong stocks has affected the returns for many members. Hong Kong stocks fell to a 2-week low as the Federal Reserve's minutes indicated that interest rates would remain higher for longer. This comes despite an improvement in China's services industry. Hedge funds are pushing back on Hong Kong's proposed rules for market soundings, arguing that they would place an undue burden on companies and licensees. The proposed rules would put Hong Kong at odds with other major jurisdictions. The demand for data centers in Asia is on the rise due to the growing importance of artificial intelligence. However, governments in the region are increasingly restricting cross-border data flows, posing challenges for global businesses. Chinese government bond yields have fallen to their lowest level in over 3 years as expectations for further monetary easing increase. The central bank is expected to continue with loose monetary policy to support economic growth. Asian shares have tumbled after the Federal Reserve's minutes failed to provide clarity on the timing of rate cuts. The performance of Asian equities in 2024 will depend on various factors, including China's recovery, the Federal Reserve's narrative, and political risks in key markets. Global financial firms with operations in China are ring-fencing their Chinese businesses to protect their interests amid concerns about data security and escalating US-China tensions. And finally, in some sports news, Hong Kong footballer Max Poon Pui Hin has become a key player for the national team after scoring twice against China, helping secure Hong Kong's first victory over China in 29 years. Phew! That was quite a whirlwind of news. Now it's your turn, dear viewers. What are your thoughts on these stories? Do you agree with Cathie Wood's bullish stance on Tesla? Are you concerned about the restrictions on data flows in Asia? Let's hear your thoughts and questions. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email,